Welcome back. Let's today learn about finance. Money makes the world go round, Bina, but finance is what keeps it running smoothly. From how governments manage budgets, to how companies raise billions, to how you manage your own savings, it's all finance. Today, let's break down finance in simple terms and explore its branches. Finance is the science of managing money. It's about how individuals, businesses, and governments plan, raise, invest, and control their resources. In short, finance answers three big questions. Where does the money come from? Where does it go? And how do we make it grow? Finance isn't just for Wall Street. It's when you take a loan, save for retirement, or governments fund highways. Finance is everywhere. Now that we know what finance is, let's explore its first core pillar, accounting. Every business tells a story. Accounting is the language that records it, line by line, number by number. At its core, accounting is the systematic process of recording, summarizing, and analyzing financial transactions. It provides a clear picture of your business's financial health. Key elements include assets, which are what your business owns, and liabilities, representing what your business owes. Equity is the owner's stake, while revenue is the income generated, and expenses are the costs incurred to operate. These elements come together in financial statements like the balance sheet, profit and loss statement, and cash flow statement. For example, if you own a bakery, your oven is an asset, your bank loan is a liability, and your earnings from cakes are revenue. Understanding accounting is crucial for informed decision-making, managing taxes efficiently, and ensuring regulatory compliance. So once we record all these numbers, the next question is, how much does it really cost to make that product? That's where costing comes in. Do you really know your product costs? Many businesses don't. Costing saves them. Costing determines the total cost of producing a product or service. It involves identifying all expenses, broken down into direct versus indirect costs, and fixed versus variable costs. Understanding these costs is crucial for setting the right prices and controlling expenses. Methods include job, process, and activity-based costing. For example, a furniture maker calculates the cost of materials, labor, and electricity for a chair. By identifying profitable and unprofitable products, businesses can allocate resources more effectively. Now that we understand costs and profits, how do businesses plan, control, and invest their money? Financial management. Financial management involves strategic planning, organizing, and controlling financial undertakings, including budgeting and investment decisions. It's about managing the company's finances, raising capital, and mitigating risk for future growth. If accounting records what happened, financial management decides what should happen next. Financial management is the strategic planning, organizing, directing, and controlling of financial undertakings in an organization. Its core objectives include balancing profit maximization with wealth maximization and ensuring effective liquidity management. Key functions involve planning for future financial needs, controlling current financial activities, and making crucial investment, financing, and dividend decisions. For instance, when Apple decides whether to invest in a new product line, that's a prime example of financial management in action. This discipline is vital for ensuring business sustainability, reducing financial risks, and driving overall business growth. Once decisions are made, how do we check if they were right? That's where financial analysis comes in. Numbers alone don't tell the full story. Financial analysis does.
Financial analysis is the process of evaluating businesses, projects, budgets, and other finance-related transactions to determine their performance and suitability. Its main objectives are to assess profitability, liquidity, solvency, and efficiency. Analysts use several tools, including financial statements, ratio analysis, and trend and comparative analysis. For example, when investors compare Tesla's profits this year to last year, that's financial analysis at work. It's crucial for gaining insights, managing risks, and making informed decisions. We've explored internal finance operations. Now let's see how governments, companies, and individuals manage money at a larger scale.
Ever wondered where your taxes go? That's the story of public finance, a crucial aspect of any functioning economy. It's all about how governments manage money through taxation, spending, and borrowing to serve the public good. This includes government budgeting, debt management, and ensuring overall economic stability for the nation. For example, when a government issues bonds to build highways, that's public finance in action, directly impacting infrastructure. But businesses need their own version of this financial management. That's corporate finance, a distinct yet related field. Behind every business expansion, merger, or IPO, corporate finance strategies are at play. Corporate finance involves securing funding, making strategic investments, and distributing profits effectively. Its key goals are to maximize shareholder value, carefully manage risk, and plan for growth. For instance, when Tesla raises capital or pays dividends, these are corporate finance decisions. Each of us navigates our own version of finance daily, and that is personal finance. You don't need to run a company to care about finance. Your personal finances are just as important. Personal finance covers everything from budgeting and saving to investing, managing loans, and planning for retirement. For example, deciding between paying off debt or investing your extra cash is a core personal finance decision. Getting it right leads to financial stability, personal freedom, and long-term growth. Finance goes from individuals to corporations. But now, let's jump into the future. Quantum finance.
When finance meets quantum physics, something extraordinary happens. Quantum finance is an emerging field, combining quantum computing and mechanics with traditional finance to tackle complex financial challenges. Unlike classical computing, quantum computing uses qubits, allowing for probabilistic models that better reflect market uncertainties. This power enables advanced risk simulation, exploring complex scenarios with multiple variables to provide deeper insights into potential outcomes. Quantum-inspired algorithms, mimicking quantum behaviors on classical hardware, further enhance computational performance for financial analysis. For instance, hedge funds utilize these quantum models to predict market changes in milliseconds, gaining a critical competitive edge. These foundational principles also underpin the powerful advancements we see in artificial intelligence today, driving innovation across finance. Whether we're modeling the future or managing our savings, all of this runs through one last powerful branch of finance, banking. Banks connect savers, borrowers, and dreamers, powering the world's economy. Banking provides essential services like savings, loans, credit, and wealth management. When a bank lends capital for your startup, it fuels economic growth and innovation. This system ensures market liquidity, economic stability, and financial innovation. Now that we've explored every branch of finance, it's time to see how AI is transforming them. In our next video, you'll learn about AI. Subscribe now and turn on your notifications.